Japanese recovery, even pre-COVID, was very steady as she goes, right? So what makes you optimistic that post-COVID you'll see an acceleration and essentially this return of animal spirits that has been so hard to make happen even after years of extraordinary monetary and fiscal policy?
Good morning, Heidi. Thanks for having me. That's right. So we see a couple of factors, I guess, driving Japan equities from here. Firstly, the activity restart, both, of course, in Japan and globally. So Japan, of course, with its extremely sophisticated export sector, has a gearing into the global activity restart, which we're seeing, it seems to me, more and more evidence of almost daily, whether it's the US ISM, German IP, China PMI, and so forth. So that activity restart, both domestically, as Japan emerges out of its own lockdown, and then the gearing into the global recovery is helpful. Secondly, and you touched on it, the Bank of Japan is, let's say, more advanced in the unorthodox policy narrative than elsewhere. But even in Japan, I think it's fair to say that we're seeing something of a policy revolution with the $2 trillion worth, or even a little bit more, of stimulus that we're likely to see in 2020, which is around 40% of GDP. So Japan, unorthodox policy isn't new, but this scale, pace, and importantly, the blending of fiscal and monetary policy, we think is a policy revolution, which again should provide a tailwind for Japanese equities.
Where do you see kind of that dynamism, I suppose, playing out sector-wise in Japan?
So I think in the first instance, the activity restart should help, of course, the export sector and some of the high-quality companies that are there. More broadly, I'm still, and of course, the three arrows are not new, but I still think those companies which can demonstrate third arrow gains, third arrow is the one that tends to get the least attention, but I think is the most important in terms of corporate reform and a structural improvement in returns over time. That's a much longer-term story. It's been around for years, but I think it is happening. So those companies that can demonstrate that they are improving prospects for shareholders sustainably, of course, that is a narrative which I think is still with us and is somewhat underappreciated given the excitement around policy and so forth.
Ben, so which other countries in Asia do have strong enough balance sheets in order to take advantage of what you called that policy revolution?
That's right. So within the broad global emerging markets framework, our clear preference is for Asia because Asia has relatively more capability to deal with the virus itself and the related economic consequences. And we would argue to flex, to adapt into what we think will be a different world post-COVID than the one we had pre-COVID. Within Asia, our preference is for North Asia. China continues to have good data suggesting it's going to feel like a V. Taiwan, Korea benefiting from that, and of course also benefiting from still rather good tech data. So Asia is the clear preference within EM, and then within Asia, North Asia, and as I mentioned, East Asia as well, of course, with the Japan equities upgrade that we've just talked about.